After experiencing record-breaking heat, parts of Europe are going dark.
The country now fighting back a full-scale invasion
and putting Ukraine and Russia up against each other.
Well, this week, the Russian energy company Gazprom drastically reduced its deliveries of gas.
Sky-high gas prices is raising new questions.
The worst energy crisis since the 1970s.
Worst is yet to come.
Energy crisis.
Energy crisis.
Energy crisis.
The global economy is going through one of its biggest moments of pressure due to a new and very sophisticated energy crisis that has been created due to sanctions from the United States towards Russia based on their invasion of the Ukraine. This particular crisis will impact every part of the economy and has tremendous implications for each and every person's everyday lives, because energy and the cost of energy is something that affects almost every product category, everything that drives consumer behavior, and of course the demon of 2022, inflation. Today we're going to tell you the full story as to how we got here in this energy crisis and what we can expect going forward, the implications, and of course what opportunities could arise from this moment in the near, mid, and long-term future. Welcome to a new paradigm, a new era, the 2022 World Energy War. On Thursday, February 24th of this year, 2022, the Russian military began its invasion of the Ukraine. This bold attack prompted the United States and Western nations to unilaterally disavow Russia and impose crushing financial sanctions on Vladimir Putin and his regime. But the Ukraine pushed back, calling upon Western nations to aid in its military conflict against Russia. Not only did the United States and other Western nations heed this call, but they also took it one step further, imposing critical financial sanctions on the Russian leaders, Russian oligarchs, and other critical banking infrastructure across the country. As defined by the Britannica Dictionary, a sanction is an action that is taken or an order that is given to force a country to obey international laws by limiting or stopping trade with that country, by not allowing economic aid for that country, etc., usually plural. Effectively, the United States tried to use economic forces to pressure Russia into stopping their invasion into Ukraine. At that moment, the United States, the United Kingdom, and the European zone imposed financial sanctions on Russia. But beyond the financial sector, they also stepped in to energy and oil. It's important to realize that the European Union receives a staggering 40% of its energy and oil from Russia. To be clear, the European Union said it will ban all imports of oil brought in from the sea by Russia by the end of 2022. The US is banning all Russian oil and gas imports. The UK will phase out Russian oil imports by the end of 2022. Germany has frozen plans for the opening of a major gas pipeline from Russia, and the EU said it would halt Russian coal imports by August. And although the European Union sought to reduce its Russian gas exposure, it still needs some reliance on Russia for its gas needs and had pledged to reduce its consumption by 2/3. In addition to this, the United States seized a ton of Russian assets that were sitting under Western banking regimes. This move is largely thought to be a complete betrayal of the rights-based financial system that the West proclaims and has staked its reputation on for decades. But more on that later. The effect of these sanctions saw an immediate skyrocketing in oil prices. Due to these sky-high prices, it's estimated that Russia actually benefited, making over $100 billion selling this newly sky-high valued oil during just the first 100 days of the war. As you can see from this chart, as soon as the war broke out, the price of oil has gone parabolic. Beyond this incredible squeeze on the oil and gas supply created by cutting off one of the world's largest energy suppliers, Russia has recently begun voluntarily cutting their own exporting capacity. As of August 26th, we know that Russia has cut gas supply by 60% relative to normal in June and by 80% relative to normal heading into August. Russia is only allowing 20% of normal flow to travel via Nord Stream, which is actively trying to create an energy crisis in Europe. This is not about turbines, it is about war. In an absolutely shocking piece of data, natural gas has surged 700% since July, sparking worldwide concerns over the natural gas pipeline. In the past, energy over 100 euros per megawatt hour in Europe was considered very expensive. But recently, Nordic energy has surged to 400 euros per megawatt hour. Germany has surged over 600 euros per megawatt hour, and the French 1 year ahead price on electricity has surged to an eye-watering 1,000 euros per megawatt hour, 10x what was previously considered crazy expensive. According to J. Kyle Bass, Europe is now paying 14x their seasonal averages for energy, and the energy wars are just beginning. One might think in this environment that the rush would be for all nations to start exporting and creating as much energy as possible to offset the Russian cut in production, to effectively take power back from the Russian nation, who is clearly using this moment to step on and manipulate everyone around them into skyrocketing inflation. But that's not exactly what's happening, as we've just received word that OPEC, the Middle Eastern collective of nations that are producing oil, has vowed to cut their production, effectively dead set on keeping the price per barrel of oil sky high in the near and midterm future. This is horrible news and couldn't come at a worse time. But the real question is, why is this all such a big deal? And how does the price of oil and natural gas affect the greater world at large? I mean, maybe we could just stop driving as much. Maybe we could cut back on our need to rely on oil. Maybe it's just that simple. But unfortunately, it's not. The cost of oil and energy in general is one of the most fundamental commodities in the world, and it factors in some way into the cost of goods and services across almost every sector. So let's take a brief look right now on how the cost of energy is having ripple effects and contributing to the one biggest demon of all, inflation. We've just got word that one of the largest zinc producers in Europe is halting their production indefinitely due to skyrocketing prices of energy. The cost of energy is now making the production of zinc unaffordable, which of course makes zinc even more affordable. You see how there's this reflexive cycle where as energy costs increase, the cost to produce other goods and services also increases, thereby creating ripples of inflation across other categories of products and services. According to the Wall Street Journal, this will contribute to higher costs of transportation, shipping, logistics, air travel, agriculture, fertilizer, and the production of other commodities. In short, higher cost of energy makes everything more expensive, from food to travel to lodging, and of course, basic necessities like staying warm in winter and staying cool in summer. Naturally, the United States is trying to do its best by using its SPR, or Strategic Petroleum Reserves. The SPR is the way that the United States stashes oil for when it needs it most in times of crisis, like right now. And to control inflation and bring the price down at the pump, the Biden administration has been rapidly emptying its strategic petroleum reserves. The fastest depletion of the SPR in its history is happening right now. And right now, the SPR is reaching dangerous levels. The United States can't afford to artificially control this crisis much longer. We very well might start seeing some serious sparks fly in the not too distant future. Another direct impact is that the euro as a currency is having a full-on meltdown due to skyrocketing energy prices and overall inflation. The euro has dropped over 20% versus the dollar since the year begun, and every day or so it drops below parity 1-to-1 with the dollar, which only has one foreseeable benefit in that we now can call it officially soccer. No, I know it's not a time for jokes, but the reality is that we have to get through this somehow, and it does help sometimes to take a step back and just shake it out, breathe it out, because these are some crazy times that we're living through. But there is a silver lining here. There is a light at the end of the tunnel, a pot of gold here at the end of the rainbow, though I'm not sure if that particular comparison applies here. The point is that times of wild economic volatility always bring with them opportunities for investment and opportunities to predict things happening a few steps ahead and benefit dramatically from them. That's right, this is a finance channel in the end. So I'm going to be giving you my take on how you can position around these wild changes in society so that you're not left holding the bag here for decisions being made by politicians that rarely benefit the little guy. You see, the reality is that everyday people are the ones left holding the bag from energy crises, inflation, and other horrible economic policies created by politicians. It's rarely the big guys and the big corporations that have to bear the brunt of these changes. Understanding and predicting them can help you change your category from being a little person pushed around at the whim of the big corporations and politicians to being a crafty investor that's benefiting from these changes and protecting your family. More on that at the end. There's still more to cover here with the energy crisis. Gas prices spiked so hard in the Eurozone that the country of Greece has pledged to cover 94% of the change in energy cost. Again, this is going to contribute to a sovereign debt crisis, where effectively the countries are taking on some of the responsibility for this inflation and creating a debt crisis that will loom over them in the future. Beyond this, we've seen unrest in countries like Pakistan, where everyday citizens received massive energy bills even after daily blackouts of 12 to 16 hours of electricity. So let's now talk about the United States. How is this manifesting here at home, and what are the effects that are changing all around us? While the EU is desperately searching for a replacement for Russian oil, gas, and electricity, this has actually placed the United States in a kind of beneficial position, because the United States is actually one of the biggest creators and exporters of natural gas and has still potential to create more production for oil. Throughout this crisis, America has managed to emerge as the world's leading producer and exporter of LNG, or liquid natural gas. And of course, this liquid natural gas exportation has been super profitable due to crazy high prices everywhere else in the world. So the United States is kind of making out like a bandit right now, selling extremely high-priced liquid natural gas to a global market that desperately needs this resource. However, we've just gotten word that the Biden administration is now pressuring, quietly bullying liquid natural gas producers to export less of their fuel. We can only assume the intention here is to bring down domestic fuel prices at the cost of profits for those liquid natural gas companies who are exporting it to a global market. But of course, this puts more of a squeeze on our trading partners while reducing the cost for American citizens. This type of a maneuver, in combination with draining the strategic petroleum reserves, has a temporary effect of lowering the cost for Americans, but long term, it's not a sustainable strategy to avoid the biggest issue: the energy war that's not only taking hold of the nation, of our trading partners in Europe, but the world at large. Nonetheless, Americans are paying over 47% more for their electricity than they were a year ago, and there's an estimated 20 million homes in America that are behind their payments on energy bills, being threatened to be shut off entirely and left in the dark. So as we look towards the future, what does this mean for life as an American, life in the Eurozone, the relationships with Russia, or of course, how the markets might react? Well, we all know that the markets are reacting super unfavorably to this wild inflation that's causing the Federal Reserve to smash demand, raise rates, and effectively crush risk assets and investment assets like the stock market, crypto, real estate, and more. Of course, what this means is that we can expect some dramatic inflation as long as these energy wars persist that will force the Federal Reserve to constantly tighten monetary conditions. What this means is that there's going to be a lot of pain in the future for the markets. Housing values, stocks, cryptos, everything will suffer as the United States desperately tries to control the value of the dollar and how many goods and services it can buy. And there is still quite a few innings left in the game to play. This means over the 12 months, it's very unlikely that we'll see a huge rebounding of the economy. In fact, it's quite likely that the United States and other developed nations will enter into a full-on recession. That recession will lower spending. The lower spending will translate to lower stock prices. Lower stock prices will translate into more selling, more downward pressure, and we have ourselves one of the biggest financial resets that we've seen in decades. Of course, each and every time this has happened, it has made one of the best buying opportunities in history, which means that over the next 12 to 18 months, between stocks, cryptos, real estate, and more, there will be the opportunity to load up on assets that are most likely to soar in value over the coming decades. You see, once things get really bad, and especially if something in the economy breaks, like for example, the cost of treasury bonds goes way too high, it will be required for the US government to print money to control those treasury bonds and their values. If the cost of debt for holding US dollars gets too high, our global trading partners will never be able to repay their debt, and this will crash the globalist economy that the United States is built on. Too strong of a dollar versus other currencies actually ruins the global economy. So we need to control inflation, the cost of goods and services to the dollar, and then we need to control the cost of the dollar as it relates to other currencies. To do this delicate balance will take quite a bit of pain and quite a bit of time. But in the process, the best strategy will be to work as hard as you can, save as much money as possible, and prepare to start buying in to some of the cheapest asset prices we've seen comparatively in decades. In the end, this energy war, while it will cause pain in the short term, will open up some of the most important and life-changing investment opportunities in history. In fact, I believe this might be looked at as one of the ultimate greatest investment opportunities of the century. And for that reason, as painful and as scary as these times are, it's important to wait with a very clinical, forward-looking perspective, understand the assets that are going to benefit the most after this period ends, and strategically position a portfolio that is set to fly once the conditions reverse. And as all things, I do believe these conditions are temporary, and that they will one day in the not too distant future be reversed as fast as they came. If you're excited to learn more about my strategy and how I'm investing into this energy war and crisis, make sure you subscribe and put that bell notification on. If you're a new viewer on the channel, my name's EllioTrades, and I primarily cover the crypto markets, which are some of the most volatile in the world. They have some of the most to lose over this energy crisis, and after it's over, they will have some of the most to gain. If you got some value out of this video, smash that like button. It's a free and easy way to show YouTube you enjoyed the content, and it'll show it to more viewers. With that said, I thank you so much for watching, and I'll see you very soon on the next episode.